Well, good afternoon, everyone, and thank you so much for joining us. My name is Paulina. I am in charge of the communications department at the Amex Cap. And on behalf of the association and Liliana Reyes, our CEO, I would like you to welcome to this webinar, How to Raise Capital During the Pandemic, the Experience of Liftit and Mensajeros Urbanos. As you know, this webinar is part of an effort of the association to share successful stories of our industry and to highlight its relevance for the economy. We are especially grateful to our speakers today, Brian York, CEO of Liftit, Santiago Pineda, CEO of Mensajeros Urbanos, and of course, Jesús García, VC Executive Director of Arca Continental, and Alessandro Paganini, CEO of Corporate Venture Capital at Engie Factory. Thank you for making this possible. I think we are all looking forward to learn about the insights of these successful startups, as well as their experience with corporate venture capital. I ask the participants to keep your microphones in mute, please, in order to avoid interruptions. At the end of the session, we will have a Q&A section for which we kindly ask you to participate through the chat box. So, Jesús, please go ahead whenever you like to start.
Sure. Thank you, Paulina. Thanks, everyone who's joining today. Just a quick note to thank two good friends of mine, Brian and Santiago. I'm very happy that we have them today to learn a lot about how to raise capital in a situation like the one we're living. Just to remind you, you have about 10 minutes each to talk a little bit about yourselves and specifically about your company, your traction, etc. And after that, we'll pass the word to Alessandro, who will be moderating the Q&A. And hopefully we'll have half an hour to 40 minutes to have that discussion. And I'll just remind you that please use the chat box for the Q&A. So, Brian, take it away.
Thanks, Jesus. Thanks for inviting me to this event and looking forward to get going here. So, I'm the CEO of Liftit, and I was born here in Bogota, and I was abandoned into an orphanage at 2 weeks old. I was adopted, and I grew up in the Boston area in Massachusetts. I was the only brown kid in my town, and I always wanted to know why I was different and why I was adopted. And my whole life, I've wanted to come back to explore my roots and get connected to my biological family. That's what brought me back here in 2017. Previous to that, I spent my whole career in San Francisco, where I did a few startups and also still run a small venture capital firm there. When I came here in 2017, I immediately saw the opportunity for Liftit, and I started to build it in Q1 of 2017 with my two partners, Angel Celis and Felipe Betancourt, who have been building businesses together for quite a while now. All three of us are from Colombia. What we do is basically what we did on day one, where we saw an opportunity in the trucking market, where we connect independent truck driver owners to retailers through technology. Before Liftit, I had previously spent almost a decade focused on enterprise software. So the very first line of code we wrote for Liftit was a way to do an interface with existing systems with shippers. And so that is actually one of kind of our advantages in the space, where we can go in, extract data from shippers, and then optimize their truck deliveries. Yeah, so we started 3.5 years ago, and today we are 350 employees across 5 countries and 18 cities. We're doing truck deliveries here in Colombia, Mexico, Brazil, Chile, and Ecuador. And yeah, we're focused on short distance trucking, because as people who have been in their technology our whole careers, we looked at trucking and we saw you could do long distance trucking or short haul trucking. And as engineers, we picked short haul trucking to focus on, because it's much more of a complicated problem to solve. And so that's what we're really focused on, is a truck making many deliveries per day. And our contracts are directly with retailers themselves. And so that's a bit of my background and the history of the company. Jesus?
Yep, Santiago, if you want to go ahead and tell us a little bit more about yourself and Mensajeros Urbanos.
Okay, so thank you for the invitation to the event. Well, My brother and I, we have been entrepreneurs since school. Before Mensajeros Urbanos, we had a company and a startup called the Startbook that was a stock simulator for Latin American markets. We had a very good traction with that company, and we had a small exit with one of the biggest banks in Spain. And Mensajeros Urbanos has a kind of different story from other startups regarding my brother and I. We are not the original founders, but right now we are the ones leading the company. We joined Mensajeros Urbanos 5 years ago. We had a common investor in Startbook and Mensajeros Urbanos, and the company Mensajeros Urbanos was struggling with getting traction in the first 2 years. And this investor told us, my brother and I, that if we could help the original founders to organize a little bit the company and see if we could help there. After the exit, I was going to do an MBA in France. So I had 3 months before going to France, and I told them, okay, guys, I can help you over these 3 months while I go to do my MBA. And on those 3 months, I get in love of the company. I get in love also of the opportunity of Mensajeros Urbanos in the market. And they offer me to stay as CEO and my brother as COO. And the main reason why we get in love with the company was because we have seen in the last years how consumer habits have been changing really fast, and people are not expecting to receive their products in matter of days. They want to receive their products in matter of minutes if possible. It doesn't matter if it's food or if it's your credit card that you lost, you want to receive it immediately. And we saw that opportunity combined with a huge problem in Latin American cities that have a lack of infrastructure, and that the mobility for loading vehicles or logistic vehicles, each day it's more restricted. So there are specific hours where specific vehicles can move or not. So we are convinced that the best way to solve logistic, the last mile, is through a collaborative network. Our vision is to connect the largest and diverse logistic network through our technology. The way that we see it is like if you want to build a house with Lego bricks, if you only have 3 bricks, it's going to be impossible to build that house. If you have 1,000 bricks of the same size and the same shape, you're going to be able to build the house, but it's not the house that you want or the house that you need. But if you have thousands of bricks of different sizes and different shapes, you're going to be able to build exactly the house that you need. And technology is the one that should tell you which brick, how, and when to use it, and in that way to achieve efficient and flexible solutions in the last mile. A little bit about the traction. Right now we operate in 12 cities. In Colombia, we operate in 10 cities, and in Mexico in 2 cities. We launched our operations in Mexico 5 months ago, and we are having an amazing traction there. Right now, we are growing in a weekly basis above 50%. Right now, we're doing a little bit more of 1 million deliveries per month, and we expect to close the year with more than 2 million deliveries per month.
Great, Santiago and Brian, thanks so much for the introduction. Now, Alessandro, on to you, so we can get started with the Q&A session. Thank you.
Yeah, thank you very much. Thank you, Jesus. Thank you, Santiago and Brian, for those introductions. I'd like to go straight into the main topic of the conversations. So ask you if you can please share with all the participants what your experience has been like raising capital with funds, with other kinds of investors during these complicated times of crisis. I can imagine it has been different to raising capital during your previous rounds. So I think we'd all love to hear a little bit about your experiences.
Sure. So for me, the COVID situation itself didn't really affect the way we were fundraising. We did get lucky that we were doing deliveries, and very much like Santiago and MU and us, like we're fortunate to be in the delivery space so that we didn't really suffer any downticks in revenue. There's actually a lot of opportunities for both of our companies. But that said, you know, it made fundraising a little challenging, but and this is kind of like part of my strategy overall, if I'm talking to first-time entrepreneurs, is for me, it's a long process for fundraising. So it's very time-consuming, the fundraising process itself, but also getting to know your investors. And so there are some entrepreneurs that can be transactional, meaning, you know, get heads down on the business, don't look up for 6 months, realize you have 6 months of revenue runway left, and then, you know, start smiling and dialing and hitting your email, asking your friends, do you know any investors? And you're kind of like in this rush to fundraise. I try to avoid that. I try to take all of the transaction out of the or transactional behavior out of the transaction, meaning like I'm always establishing a relationship and trying to get to know the person and them to get to know me. Because even with us, we just closed around 3 weeks ago as our Series B. It really, definitely the business matters, metrics matters, but at the end of the day, at least in my experience, it comes down to the founder and the founding team as like the one thing that's going to get the investor or investors like excited enough to give you a term sheet to then do diligence and figure out the market in your business. So, and for me, that experience is built up over time. And so like, as an example, like our new lead investor, we actually can't announce it yet until next month. So the news will be released soon, but you know, they're out of Miami, they're US-based venture capital fund investing in logistics specifically. But that relation took me a very long time of the general partner has a blog, and I would follow the blog. I would comment on all his last mile delivery stuff. Over time, he got to know me. I would fly to Miami. I would get to know him. And then you establish the relationship, and then you can build in the fundraising part thereafter. And so it's getting to your question. Sorry if it's a little long-winded. It's we had started the Series B well before COVID hit, and definitely kind of changed the way we actually had to redo our forecasts and our budgets, which they originally got their term sheet on and got the original investment committee to approve. So they actually had to reapprove it. And so that was a little bit challenging, but we had started well before that. And it was kind of this build up to the round closing.
Yes.
Very interesting. Excellent. Santiago, what has your experience been like?
Well, in our experience, it's been, as Brian told us, is very similar in the case that we are very fortunate that at the end, our company somehow has benefited of the COVID in growing as a company. That I believe that we are few the ones that can tell that this is happening. And it has a huge impact, because at the end, most of the companies, small, medium, or large companies, are trying to move as fast as possible to deliveries and continue their sales through digital channels. And companies as Liftit and Mensajeros Urbanos are a key player on that strategy. And probably these companies that had in mind that in 5 or 3 years they were going to launch their digital strategies or continue working on those strategies, they had to move really fast and do it in matter of weeks. So it's been also a huge challenge for Mensajeros, and I'm sure that for Liftit too, to be able to grow as fast as these companies need. But that's why I believe that we have also been successful in our rounds, because at the end we have been able to give our clients or to accomplish what our clients need. It's been an amazing journey the last 3 months, and it's been like a roller coaster for us. As Brian told, also we started our Series B, I believe that 14 or 16 months ago, probably. And And in the beginning, especially in Mensajeros Urbanos, where we are not the original founders, and the original founders are not working anymore in the company, so we needed to arrange a lot of things in the cap table, do a lot of refresh. We were a Colombian based company, so we needed also to move the company to a holding company outside Colombia. So there's been a lot of things that we needed to do. And at the beginning of this year, finally, we were able to have a lead investor. But once the COVID started, the lead investor decided to put on hold their investments, especially because they had a lot of companies behind them as LPs, and these companies also put on hold a lot of the capital calls and all that. So I believe that we were lucky that at those moments our metrics start growing. If we were growing in a 10% basis month over month, we start growing in a 30% month over month, and those metrics allow us to also gain traction again in the VC world, and we were able to find another lead investor in matter of 2 weeks. But it's been a roller coaster, because at the end there's a lot of uncertainty. There's a lot of things that the investors are also trying to know what to do on these times. Many of the LPs are also in a weird situation where they need to see what is going to happen with their money, if they want to continue putting their money in risky ventures or in VCs, or prefer to have the liquidity on their hands. So it's been a roller coaster, but at the end, I believe that the things that help us to succeed in the round was to have a really good metrics, and not only the growth metrics, but also financial metrics. So that's why I believe that we were successful.
Right. Yeah, I mean, there's obviously opposing forces in this situation, some that play in your favor, as you mentioned, given the industry that you're in, some that obviously work against the activity of fundraising. But it was interesting to hear that, Brian, you raised capital abroad, having nurtured this relationship for quite some time. And I'm wondering if, obviously a lot of industries have been impacted very negatively by this pandemic. Others, such as logistics, have actually seen an uptick in their performance, such as your own company. And I'm wondering if you have perceived that this aspect has allowed you to broaden your scope of research for fundraising to international markets. So if you feel that VCs from abroad have been more responsive now that your industry finds itself benefited from the current situation.
Good question. From day one, I was already thinking outside of Colombia and Latin America, but like strategically, I actually deliberately, the seed round we did in 2017, I came here and some of our go-to market was actually through fundraising, which is kind of weird to say, but we just had as many meetings as we could to meet with local investors here. We were fortunate to, over time, because you don't get the yes, at least in my experience, you don't get a yes right away. So you got to work those relationships. But I wanted to raise locally here because being in truck deliveries, we wanted to get, board members and CEOs of shippers on our cap table to get those first few truck deliveries. So we deliberately raised here in Colombia, primarily in 2017. I then immediately went out to do an A round, and I realized there's no way we're going to get Colombian money. It's changed a little bit now, but there's no way we're going to, at that time, like late 2017, 18, to lead investor for an A round for Colombia. So I started to look into the US, into Mexico, and so that's when I started fundraising outside of Latin America and Colombia. We were able to, the A round was led by, co-led by the Brazilian fund and a fund out of the US, but also, Jesus participated in that round as well with Arca. We got a lot of investors from Mexico because we actually expanded to Mexico and used that as leverage to get interest from local investors there. And then, so that was kind of like our first shift of getting outside investors into Liftit, into Latin America. And then for the B round, I was pretty much all just focused on the US investors. I did a little roadshow there for a few months into all of the main markets. And for us, it didn't actually come down to COVID and that we got lucky and that trucking is a really interesting market, especially now. But actually, we kind of caught that wave of Latin America kind of heating up over the last 18 months. So that allowed us, because before that, it was difficult for sure. You really had a few plane trips out to San Francisco to really warm up the pipeline. But then, 18 months ago-ish, everyone and their grandmother tried to all of a sudden Latin America is super hot. What's going on down there? And we sort of that's how we rode that wave a little bit to get those, the first term sheet that we got that didn't work out though. So that's how we thought and how we played the global investors. So it's more and even despite COVID right now, I think there's still a ton of interest in Latin America for many different reasons. I think it's going to stay around for at least the next 3 to 5 years, especially people playing in deliveries and have any kind of exposure to e-commerce. Those are clearly going to be winners over the next few years. And I think maybe not today, but certainly you're going to see kind of that heat in that interest into Latin America come back. And I think whether it's me or Santiago or new entrepreneurs in Latin America, I think that's going to be kind of in our favor for the next few years of being able to leverage that momentum from outside investors.
Great. Santiago, any comment on that question from your perspective?
I believe that, well, as Brian told, it's here in Colombia regarding that we have very successful startups. The VC environment, it's kind of poor, especially when you want to go for a Series A round or Series B. You have a lot of seed VC, seed investors. You have a lot of them here, but once you want to raise above, I don't know, $2 million, it's really hard to find investors here in Colombia. So most of us needed to go out and find investors outside Colombia, and probably that's why you have seen a lot of Colombian guys or entrepreneurs around Mexico, around San Francisco and other parts looking for money with very successful startups. Because also I believe that there is something positive on having a few access to money in the early stages, because at the end you know that you have to be really efficient with the money that you raise, and that allows you to have better unit economics than many other startups that are funded in other countries or cities with more access to capital. And this allows you to, when you go out to find or to look for money with outside investors in San Francisco, Mexico, or other countries, you find out that, or investors found out that at the end you have better unit economics and they are surprised, because at the end they say, how do you have achieved these numbers with so few money behind? So that was just only another thing to add to what Brian just told.
Right, perfect. So we're talking obviously about, creating reasons and your appeal towards venture capital investors to be selected as an opportunity to be invested in. But it's obviously, this goes both ways. And one of the questions we have from one of our participants is actually about the steps that you are actively taking to make sure that you are choosing the right investor for your company. So perhaps you can tell us a little bit about your reasoning. Is there anything that you actively do in order to decide whether this is the right investor that I want to partner with for the next 5, 6, 7 years? Can you tell us a little bit about that process?
Sure. Santiago, you want to switch it up and go first this time? I'll go second.
Okay, great. Well, I agree a lot with Brian. At the end, this is a matter of people. So at the end is the good relationship that you are able to establish with the investors, and also the investors how they feel with you and the founding team. So I believe that at the end it's that you feel comfortable with the investors that you are bringing into the company, and if there is a good chemistry, I'm sure that it's going to be really a really good relationship in the long term. And I believe that's the most important, more than the name or whatever. It's that. And also there's other things to consider, like for example, like if you are going to open a new market, probably you need a local investor that helps you to understand the market that you are opening and other kind of variables. But at the end, the most important thing is the chemistry that you have with investors.
Totally. Yeah, that's exactly what I was going to say. You know, because I think Santiago has the same strategy where it's very kind of like you go long on the fundraising process. It's not like it can be, but it's for me, it's not going to be kind of a 1 month process. So because you're spending so much time with these investors beforehand, you get to know if there's good chemistry. I mean, once they're on the cap table, you're going to be going through a ton of ups and downs, spending a ton of time socially with these investors. So you'll know kind of as you're spending the time fundraising, getting to know the investor and them getting to know you. You're just like as you pick friends or other partners in life, you spend the time, both sides spend the time to say, hey, like, is this someone who I see myself hanging out with in 10 years? Yes, there's going to be money involved, there's going to be business, but at the end of the day, it's very relationship based, and you can kind of filter that out by the legwork that you do leading up to actually going through a formal closing.
All right, so that's very interesting. So we talked about how you actually get to decide whether an investor is the right person the right fund to partner with. One of the questions we have from our participants is also about how do you actually create that first relationship? How do you find which investors are out there that could potentially make sense for your company, and therefore, create that first point of contact? Do you have any specific tools, any specific databases? Is it through, the network of other entrepreneurs, the network of your previous investors? Is it using a brokerage kind of system? What methods have you used, and in your experience, what has worked better than others?
I'll take this one. So for me, I love LinkedIn. Super old school tool, but I use it for everything, whether it's fundraising, recruiting. This morning, I spent a few hours doing SDR work, just pounding LinkedIn, finding leads. For me, it works good. I've tried other channels, but LinkedIn is just like a gold mine for me in so many different ways. So I start there. So when I came here to Bogota, I didn't know anyone except my partners. So I just went to LinkedIn, super boring days, 10-hour days in front of LinkedIn, just like sending cold messages to tons of random people. Like I just kind of curated based on, we have 10 people in common that we know must be somewhat interesting to meet, grab a coffee, then see if they were investors themselves or no investors. And through that was the way I was able to come here, not know anybody, and then to start networking was just through LinkedIn. I did the exact same thing for the A round. I actually personally went to Mexico City myself in 2018 for almost a year. Had never been there before. Didn't know anybody. Just used LinkedIn, and it's super boring. There's no that's the silver bullet, at least for me, is LinkedIn. But there's no trick to it. It's just like hundreds of cold messages a day, lots of very random coffees like in the beginning. But if you can be really efficient and narrow down the kind of the pipeline thereafter, which is important. And similarly with the B round, I used LinkedIn a ton because even though I had done a bunch of startups previously, and I definitely have investors I could go to, now that Liftit's here and I'm in Latin America doing a logistics truck delivery platform, most of my previous network is not interested in that space, especially for a B round. So I basically, not 100%, but definitely over 50% just went back to LinkedIn. You have to really go deep on the person. You can understand like what they're involved with, like what they're really interested in through Twitter and their blog. Spend the time to actually get to know the person through online. That really helps me. And then, by the B round, like we had enough investors to get warm intros too, but every day I'm on LinkedIn to use as my channel of getting investors, customers, or recruiting. So that's what's worked for me.
Yep. Well, I have a lot of things to learn from Brian. I know that he's a really successful entrepreneur raising money. I haven't. This is my first time, or the first time that I go out for a Series A or Series B round. In the last startups that I had with my brother, we focus more on a bootstrapping model more than an aggressive capital raise model. So I'm learning in this process at the end, and for these rounds, including the seed and this Series A, what has worked a lot for me is more the introductions of people that I know with potential investors and a more warm lead more than a cold lead. So that's how it had been working for me. But as I'm telling you, this is my first time raising a Series A round or Series B. So I know that Brian it has more experience in this than I have.
Right. And in fact, going to Brian's experience, we have a question specifically for Brian about your technique, your strategy in fundraising. And the question is that somebody's saying that they read about 10 times you got told no back in 2017 when you were raising capital in Colombia, and then eventually the 11th time you got the yes. Their question is, what was the main differences that really made that change between the 10th and 11th pitch? Did you change your approach in the way you were pitching? Was it the way you presented your financial projections, or was it just luck and a fit with the other person on the other side of the table?
No, I mean, it's nothing changed. What changes is that they get to know you over those interactions. And it kind of goes back to my underlying principle of it takes time, and it's a relationship-based game. So after that particular person, who's a local angel investor here, who's very close to the company now, by that time, the 10th time, he had seen me, and every time it's super important. Like, you know, part of the magic is like every time you go back, you have to actually go and build an interesting company and have good metrics. You can't go out and, you know, do your first round of interviews, fundraising, and then come back a month later and then just go sideways or have no progress. You have to go back and execute as well. So that's important. So for me, like basically everyone says no to me when I first meet them. But for me, that's actually like the first step of getting a yes, because actually it'd be kind of weird if someone just says yes to me on the first meeting without actually even knowing me or knowing the business. So I go in, I expect the no, I get the no, and then it's all about following up. And for me, actually, what works incredibly well, I'm doing it now for potential future investors. I do it every round, and the moment I start a business, I start an investor letter that I send out every month. I BCC everybody. Everyone I meet, like my list in the seed round was over 3,000 people, which included competitors, customers, friends and family, potential investors. And you send out that list and you give everybody a taste of what it's like to be an investor in your company. And then they get to know you over time. They get to know the business. They know what it's like to actually be part of your business. And that's actually when you start converting people. But you need to get through those no's. People need to start to get to understand you and your business. Then actually, if you're actually building an interesting business, those yeses will convert. And so that's kind of my experience. And getting back to that question, it was just kind of a matter of having that guy see me repetitively, getting to know me, and seeing the business growing every time that he sees me.
Great. So I wanted to quickly jump onto another topic, which I think is also very important in these times of crisis. So let me ask you the following question. An alternative to raising capital in order to ensure the continuity of a startup in times like these is that of managing your cash flow. So reducing your costs, renegotiating deals with partners and suppliers, and obviously in so doing, extending the runway of your company. For the benefit of the entrepreneurs on the call especially, could you please share any strategies, if you have adopted any, to extend your startup's runway in these times, commenting on what has worked well, what hasn't worked as well, and just giving any general recommendations you can on this aspect?
Well, in Mensajeros Urbanos, We have a huge challenge, that is that our main clients are B2B clients. And here in Colombia and probably in all Latam, big companies are used to pay you in a really wide space. So it's not weird to find companies paying you 90 days or 120 days after you deliver the product. So it's a really challenging environment, taking into account the cash flow. So COVID for us was a good opportunity also to talk to all our clients and tell them, guys, well, we are growing with you. We want to give you the best service possible in this time and ever. But it's really difficult for us to have this kind of deals where you are paying me 120 days or 90 days when we are growing really fast with you. If we continue at this pace, it's going to be impossible to work with you in a few days. So we could renegotiate a lot of our contracts with these huge clients that allow us to start reducing in a 50% the difference between our payables and receivables. And also we start focusing on the most important or the core expenses that we had. And all the things that were not part of the core, we start reducing it a lot. And that allow us to, in taking into account also the growth that we had in the last months and last weeks. Last month we were able to be with only a loss of $10,000 in a company that is growing in a 30% pace and we work with more than 1 million deliveries per month. So for me, it's very important, this part. I believe that is the most important part of the company in when you have a crisis or when you have that it's going to be difficult for you to raise money or probably your income is going to be also being affected by a situation like this. So the most important thing is your cash flow, and that's the number one rule of your company, and you need to focus on that. That all your team understand the importance of taking care of each dollar that you have in your bank account and each dollar that you also have in your receivables and all the money that your clients owe you. So that's, for me, it's the most important part, especially when you have a crisis environment or these kind of situations where money is not that available out there.
Yeah, Santiago has done a better job than we have of renegotiating contracts. We haven't done a lot of that, even though our investors and board have brought that up multiple times. For us, perhaps like being in the trucking space, it's a little bit more difficult to do that at this time. At least that's what we're seeing. But it is something it has been great work, and definitely suggested to do that, what MU is doing. But for us, we actually, so that's one side of the marketplace for us is the shipper. We haven't been successful in renegotiating those contracts, but what we have been successful in is renegotiating how we pay our drivers, our truck drivers. So we were paying in full every Friday to all of our drivers, and actually trying to get that to daily payments, which is still an aspiration of the company through some of the relationships that we have. However, right now we actually took a step back and we went to every other Friday we're paying our truck drivers. And in Mexico, we're taking it actually a little step further where if they're not using if they're not using the application in full, we're actually further delaying that. And we actually, because in Mexico, the truck drivers are generally used to getting paid net 30 anyway. So we can actually layer in the fact of them not using our technology as a way to help them really take the technology serious, and because it's such a core part of our business, but also delay, kind of slightly penalize them with the delay. We're not going to withhold money, but just a little bit of more of a delay. So that actually does help our cash flow considerably, because both MU and Liftit have working capital cycles that they have to manage, and it becomes super difficult as the company is scaling, which is actually one of the main topics that I'm faced with right now, is how to manage that and continue to scale the company. But so for us, what has worked really well is just kind of the nuts and bolts of the expenses, which is we canceled all of our office spaces. We had at least 2 office spaces in every country. We immediately canceled everything, including here at headquarters. We had 200 people at headquarters down the street. We killed that office space. We force majeured everything. And we just took an early bet that there will not be office space this year. And now actually we're thinking possibly next year as well. And now, as we speak, we're actually considering just being 100% remote for the rest of the life of Liftit, because we actually has worked out better than expected of being fully remote. So that's the first thing we did, is office space gone. We did layoffs in every country. Every country had to lay off at least 10 people, which we went through in March. And this was actually as we were closing the round. We were like, nobody knows how long this is going to last. We need to be way out ahead of this, regardless of if we have $1 or millions of dollars in the bank, we have to make these moves. We did that. And then we now actually today, still every expense has to get double approved by myself and the head of finance. Even if it's a pen, like, you have to email me, explain why you need that. And it has to get double approval. So every penny counts. And that goes for hires as well. All of our, most of our countries are actually becoming break-even profitable over these last couple of months. And they should be, and they will be making hires, but that country manager has to get double approval for that. You have to prove why this person is mission critical, how this is going to affect your unit economics over the next few months. And then we can approve that. And I'm involved with every of those meetings. It's not a scalable situation. I plan to take myself out of it, but until things start to improve, which they really haven't, especially here in Colombia, I'm going to be a part of every one of those meetings, and you have to convince me why we're going to spend a penny on what you're requesting. And so that's what we've done to conserve cash.
Great. Thanks for that insight. I'm sure entrepreneurs on the line are going to find that very, very helpful. I wanted to quickly touch upon something that Santiago mentioned. You mentioned the importance of having a low cash burn in these times. And I was wondering if either of you raising capital during this time of crisis have perceived a greater appeal of, at least a proximity to break even, or, a low cash burn from the investors that you've been talking to. And also if you feel like that has been the case, do you think that this will become even more so the case once we come off this crisis? And do you think it's going to remain as a constant, this focus on low cash burns and the possibility of achieving a break even?
Yeah, it's critical right now. We started to see it even September, October of last year with WeWork. Then there was a few more punches with other big names, and now we're in COVID. So, COVID's definitely going to be the rest of this year, probably most of next. And so I think you absolutely have to show a short-term plan to profitability. Fortunately for Liftit and Mensajeros Urbanos, like, we're both there, but pretty much it sounds like. So, we're fortunate to be in that regard, but we try to drive that home in every conversation that we have with our board, our future investors, with our current employees. Everything right now is about healthy unit economics, getting to every country needs to be break even profitable over the next 3 months. Then we're going to start working on headquarters and how do we make this business profitable by the end of the year. So that's very much a reality for us.
Yeah, I think that for entrepreneurs right now, we have it was really difficult to grow. Right now you have another challenge that investors want you to grow at the same pace, but having positive unit or having a positive cash flow. So right now the situation is harder for us. But I truly believe that if you are really you pay attention to every detail, or especially in some, as Brian said, especially in some specific moments of the company, if you are focusing every detail of your expenses and your income, you are able to understand a lot of things and gain a lot of efficiencies in your company. And you also understand that you are spending money that probably you never needed to spend. So So that's really, really important. And right now, every entrepreneur has the challenge to grow really fast and have a positive cash flow or be really near to that. I'm really happy that here in Mensajeros we were able to do that, and probably this month, and I'm sure this month we are going to be positive cash flow, and we will have we will reach break even. That it's an amazing achievement. But as Brian said, it's really difficult to maintain that if you want to continue opening new markets, if you want to continue growing really fast and expanding too fast. Mexico, for example, right now is growing, as I told you at the beginning, in above 50% week over week, and it's really difficult to maintain a positive cash flow and a positive being break-even in those countries where you are growing so fast. It's really very, very difficult. So you need to find that kind of balance and try that your market that you already have very mature. Try to like balance the expenses that you have in new markets where you are growing really fast. But that's the new challenge.
Of course. So to remain on this topic of challenges during these times, I wanted to ask you the following. Managing finances can be very challenging during a time of crisis, but managing your workforce to keep your team motivated and performing at their very best in the reality that we are living in today can be at times even more challenging. So can you please share your approach to this issue, and if you've introduced any routine, any activity within your company to help you face this challenge?
Yeah, I think that right now that you are in your house and working from everyone is working at house, including, for example, in Mensajeros, including our call center. We have a really similar size of people working with us, like Brian and Liftit. Today, it's more important to be near them. So it's more important having calls every day with them, try to guide them on and maintain the same vision and mission that you have in your company and be able to guide them. Here, I have learned a lot of things also. One of that is that's why it's really important to have really good leaders on your team, because if you already have those leaders, it's going to be easier your job. But when you have a weak leader, it's in this type of situations where you don't have contact with everyone in your company, and neither in the hall or whatever, it's even harder for you to maintain your company aligned. So that's the biggest, and this is something that everyone tells you, and not only for these kind of situations, but always, is to have a really amazing team, to have a really amazing leaders that are able to express the vision of the company and be able to guide all the people to this. And when you have a weak leader is when you start having a lot of problems. And one of the biggest challenges that I have found in this quarantine of the workforce working at home is the call center. That's the biggest issue that we have. We have, I don't know, 100 people in the call center right now, but these people have a low wage, have a low salary. They are young people that they don't see this as a long-term job. So there's a very, very difficult situation to motivate them and try them to continue giving their 100%. And the only way in these cases is to have a really clear KPIs to measure each one of them. And that's the only way to do it in this type of roles in the company.
For us, you want me to respond to Alessandro, or?
Yes, please. Yeah, that'd be great.
Okay. For us, we just try to take advantage of being 100% remote right now. So we started to do small, what can we do? Quick wins. So we started to send people small packages, mugs, mouses, like anything that will kind of show an appreciation back to the employee. We also, because we had a lot of equipment in our office space, we then delegated all that equipment back to our employees to make sure that they have nice workspaces at home. a nice desk, a nice chair. Otherwise, we would have just been storing that in storage somewhere. So we just, and that includes monitors, everything we had in these offices, we just delegated back to the employees and make sure that they're super comfortable at home. We launched a Rockstar program for all of our countries, where someone like the country will nominate who's the Rockstar of the month. They get $100 bonus to go to or to spend on whatever they need to spend. That actually, it's small, but it really, we hadn't had that before this, and it really, people get excited about that, and every country kind of manages it differently and has a little bit of different marketing around each one. Those have been some quick wins for us that have proven beneficial.
Excellent. So I think to end on a positive note, I wanted to ask you now about the opportunities that you see in a post-COVID world. Things are obviously going to change, but for example, do you see opportunities creating collaborations and alliances with other startups? I can give you the example of a startup in our portfolio where in order to create synergies and reduce costs and present a more attractive value proposition to investors, they actually merged with another startup within their same industry. And so I was wondering if you see, you know, greater value in these kind of collaborations and these kind of other kinds of opportunities creating in a world post-COVID.
For us, we don't see opportunities with other startups. Actually, it's really important for us now that we have closed the B round. So between the B and the C round for us, it's really important to triple down on what our core business is and not to have any distractions. So as much as we would love to partner with other people in logistics services, we just really need to focus on the momentum that we have. And so, you know, there is a lot of opportunities for us, a lot of smaller trucking companies that have approached us because they're short on cash and they've talked about merging. But as much as I would love to do it, it's just not like a great time for us to do it, just relative to the trajectory of Liftit. So, you know, as it relates to partnering or working with other startups, that's not in our cards. But as Santiago mentioned earlier in the conversation, we're seeing the exact same huge opportunity for us with these retailers that did not have, or had a little bit of e-commerce in their short-term plan before COVID. Now it's their main priority to go direct to consumer. Everyone's just flocking to this new strategy of doing e-com, whether you're selling a pair of shoes or getting a refrigerator delivered. And so those big bulk items are kind of like our sweet spot with the trucks. And so we see an incredible amount of opportunity with retailers from Monterrey down to Sao Paulo. And we see a lot of foot traffic stores from these retailers now turning into distribution centers where now our trucks are just going to the store, loading up and going like straight to home delivery. I think that's here to stay for at least like another couple of years, and that mixed with e-com, mixed with direct to consumer, I think the players in the delivery space are going to have a few more years of riding that wave. So those are the opportunities that we're seeing.
Santiago, in your case, opportunities that you're seeing on the back of COVID?
I believe when you talk about a merge or something like that with another company, I believe that you have to be very careful about that. At the end, I believe that each company has its own pace, and also it depends also on the stage of the company. I believe that companies that are like Mensajeros Urbanos and probably earlier companies, it's really difficult to merge. I believe that that process of merging a company, it's really difficult, not only because of all the deal or getting a deal with the company, but the biggest challenge is to align the cultures, to align the processes, to align the vision of all the ones of both companies. So I believe that when you have these kind of challenges in a specific stage of the company, as Brian mentioned, is that you need to focus on the core of your business. It is the most important thing to do. And if you are going to spend a lot of time thinking about merging a company and all the things that implies to merge, probably that's going to be a distractor for you, and probably it can work in the other way around that you expected. So probably if you try to merge, probably that could be a wrong decision. But as I told you, it depends on the stage of the company. Probably if you are a bigger company with a lot of things more structure or with a market already established, probably it's easier for you to merge and you have more opportunities merging and more companies to the and grow faster. But probably in the stage that we are, I believe that merging with another company could be not beneficial for us.
Absolutely, that's a very fair point. And I'd like to take that chance. We're nearing the end of the time we have available, so just want to thank you for your input. I think it's been extremely helpful and an interesting conversations. I'm wondering if you have any final remarks. There is many entrepreneurs on this call at the moment. I'm sure they'd find a lot of value in any recommendation that you can give in terms of your experience of raising capital during this pandemic and just your experience with making things continue in the best possible way within your companies.
From my side, and going back from a question that one of the audience made to Brian about the no's that you receive in all the meetings that you have, I believe that the difference between a successful entrepreneur and the one that is not successful is the way that you receive those no's. If you receive those no's and you feel, that doesn't work, and you have a bad attitude regarding those no's, probably you're going to fail. But if you receive each no like a booster of your mentality, and also tell, okay, I received this no, I will understand why, and I will give my 100% to the next time don't receive that no. Not only for investors, but also for clients, also for employees, also for whatever you do. This is going to be the differentiator of being a successful entrepreneur or not.
Yeah, totally. And further to that, whether we're in COVID or times are good and frothy, it's hard being an entrepreneur. So there's no, and this is my 4th time through. It is insanely hard, ups and downs. COVID is just kind of another speed bump in that, like it's just another challenge as an entrepreneur you have to power through. And but even in good times, it's going to be really challenging. So a lot of the times when I meet with first-time entrepreneurs, they expect, they see what Santi and I have been able to achieve, but that doesn't happen overnight. It doesn't get easier. Again, I've done this multiple times, and sometimes it just gets harder, and the emotional swings are crazy. Every day you're happy in the morning, you're sad by the night, and in between and all day long. So you just have to, when you start the journey, it is a journey. It's like running a marathon. Don't get too caught up in that first mile. You have to go the full 26 point whatever. So you have to really think long term, and just keep a positive attitude, be very persistent, be extremely bullish, and build a big company. But just like at the end of the day, just continue to persevere and keep a positive attitude.
Absolutely. Resilience and understanding that every no puts you one step closer to that yes, which will eventually come if you pursue it. Jesús, I see you're on as well, if you want to say anything.
No, I just want to thank everyone for joining. Thank you, Brian and Santiago, for accepting the invitation to sharing your experiences with us. And I also want to thank Liliana, Paulina, and the Amex Cap team for helping us put this together. And obviously, Alessandro for doing a great job in moderating all the Q&A. So with no further ado, thanks so much and see you next time.
Thanks everyone.
Thanks for the invite.
Bye-bye.
Bye.